Profit maximization is probably the easiest objective function to understand. The firm tries to maximize the amount of profit it generates. You might think all firms should be profit maximizers, but the stock market has an uncanny way of seeing value in some companies that might not turn a profit for years to come, while other, profitable companies' share prices languish. The expectation of profit moves markets, and in general, more profit is better. But even a powerhouse of a company like Amazon took more than 6 years before they recorded a profit. So, profit is not the only factor that drives valuation. This happens because investors are able to forecast with at least some degree of accuracy what the future is likely to look like for the business in question. Savvy investors are willing to accept lower profit in the short term if they believe the business will increase in value in the longer term. So while they might not be trying to maximize profit right now, they may still be seeking to increase their overall wealth. A knowledgeable enough market may even bid the company's share price, and thus their market capitalization or overall value, up even when the company is losing money because they see a bright future on the horizon. But let's focus on firms that are trying to maximize profits. Profit, or net income, is simply revenue less costs for the firm in question. Therefore, profit maximizers are simultaneously trying to grow revenues while cutting costs. In this regard, we can think of profit maximizers as organizations who are likely to be mature with mature product portfolios. These companies are not focused on hyperbolic revenue growth in the distant future, but rather grinding out profits starting right now. In that regard, we can often think of these companies as cash cows. Their operations generate a tremendous amount of free cash that can be used for other purposes, but their growth opportunities might be limited. I think it's safest to assume that most companies want to maximize profit in the long run, as that will ultimately lead to higher share prices, which is normally the primary charge given to firm leadership by the shareholders. However, the approach to profit maximization can be quite diverse. Profit is maximized when revenues are at their peak and costs of doing business are as low as possible. As such, two other strategic approaches to competition logically follow out of the profit maximization mindset. Those are cost minimization and revenue maximization. There may be other reasons that the company would want to maximize revenue, such as showing a growth rate to drive up venture capital valuation, but in general, it all comes back to profit, or the expected future profit of the firm when we talk about profit maximization. Some companies are limited in how much they can grow their revenues, so for them, cost minimization is the exact same thing as profit maximization. Profit maximization is also linked to shareholder maximization because earnings and revenue growth are typically associated with shareholder value. However, we will explore shareholder value in greater detail in the next video.